welcome back to my channel. So this week's video is all about answering your most asked questions from this year. And with the holidays here, I wanted to keep things light and fun, something different from my usual content-heavy investing information. So this video is a bit more informal while still covering some trading topics that many of you have been curious about. So for my new subscribers, this is just a great way to learn a little bit more about me, both as an investor and just me as a person. I've included everything that, for the most part, y'all have sent me questions about. Everything from how I got started in trading, some of my favorite strategies, and even a few personal questions that y'all sent my way. So yeah, this is just a laid-back conversational video, just the right vibe to wrap up the year on a positive note. So this will be a bit all over the place with a mix of topics, since the questions aren't arranged in any particular order. So yeah, the first question. First question is, what is your name? My name is Star. For anyone who doesn't know, or any of my new subscribers, my name is Star. Yes, that is my actual name. And y'all are probably wondering why I have Tesla pulled up, but yeah, I'm about to show y'all in just a second. I'm gonna kind of go back and forth with showing y'all a few things and answering questions so that you still get some value out of this video while y'all are kind of just getting to know me. But yeah, that's the first question. Second question that kind of goes along with that is, where are you from? And then, where do I currently live? So I'm from Phoenix, Arizona originally. I currently live in the state of Texas, so I'm on Central Standard Time for anyone wondering. And then the next question was, how long have I been investing in trading? So great question. So I've been investing in trading since 2020. So we're going on 6 years as we enter this new year. So yeah, that's that. And then the next question is, do I trade a specific time of the day? I know some traders only trade maybe the first like 30, 45 minutes of the day, some maybe the first 2 hours. And I've answered this question before, but for those who are unaware, I'm more so focused on setups. I'm not necessarily a trader who looks at the time period for the day. I'm more so looking at what's going to be high probability. So if I see a specific setup and it makes sense, then I'm more likely to trade that rather than chasing a time frame. It's just more so about looking at the charts, looking for patterns, looking for anything. So for example, if I see a flag pattern, anything that stands out to me is going to be more so what I utilize as confirmation for me to enter a trade. And I'm looking for specific price levels. I'm either going to look for the liquidity to go along with the price action. I'm looking for reversals. I may trade the breakout. It just really depends, honestly. So I'll scan the market, for example, and just look at stocks to see exactly what's going on, looking for any type of confluence, divergence, and then I just go from literally stock to stock. That's more so my strategy for trading. So for anyone wanting to know, it's not necessarily a time frame for me. It's just combining all the factors that I have for my trading plan, which again is going to be implied volatility. I'm also trading open interest and volume, and I'm just trading for specific details like in the money, out the money, depending on contracts, or if I'm swing trading. It's just all about understanding how you want to trade effectively and then just sticking to your plan. So your trading strategy should always be something that you adopt over time, and if you have to alter it or change it, you make those corrections as needed. So yeah, essentially that's how I trade. I don't focus more so on time of day, because honestly I can trade at noon, and if there's enough volume for me to get what I need and the setup looks right, it wouldn't matter to me at all. So that's just me. But one thing I do want to show you guys, and I kind of mentioned it in the last video, but I didn't go into great detail. If you go into Thinkorswim, if anybody uses this platform, one of the things I did want to mention to you guys is under the Analyze tab, the probability analysis. If you go here, you'll see it. This is going to be a good way to kind of measure, if you're looking at the volatility, that's what it's based upon. It gives you an analysis on the probability that the trade could meet any particular benchmark that you're setting or any price level. So for example, we're looking at Tesla, right? Let's say we're looking at December 10th. You guys will look at the number you see for 351.72 as the price level. That top number, that 35.19, that percentage is going to be for call options. The 64.81 is going to be for put options. So if you were saying to yourself, will Tesla reach 351.72 by December 10th of this year? The chances for those call options are going to be 35.19%, so 35%, and then a 64.8% chance that it will make it for the put options. Now, this is me looking at it within the money, so you can change the probability mode to in the money, out the money, or touching. And you'll notice if you change it from in the money to out the money, it's going to show you the inverted version of that. So if we were to go back to December 10th, looking at the ranges, you're going to see the numbers change because they're going to be inverted. So I did want to show this because I forgot to mention it in the last video. So yeah, this is just a good way to kind of learn the analysis, what they have. And again, this is based on implied volatility. along with price levels. And then you can also see the probability range here is at a 68.27%. Okay, so another question I had is what are my top stocks or ETFs from the stock sectors? So I'm going to show y'all a couple things to kind of answer this question. One of the things I do want to show you guys is under Market Watch. I'm going to click here. You're going to see a watch list for the indices. And of course, it's going to show you based upon what we see for the breakdown. So you can click on Dow Jones. Of course, it'll show you that. It'll show you the NASDAQ 100, the Russell 2000, S&P 100, and the S&P 500. And this has it broken up into sectors. And you guys know my last video was kind of covering this in more detail. So if you haven't seen that, go ahead and check it out. The link is in the description box. But this breaks the market down into sectors. So you can see the specific top stocks or ETFs within the industry. You'll see these bigger boxes are going to be the ones with larger market caps. So this is a free tool that you can use. I know some websites actually charge for this information. Of course, Thinkorswim offers this under their Market Watch tab again here for free. So you don't have to pay for this information. I also want to show y'all this under fundamentals. You'll see a breakdown. So for example, Tesla, it'll also tell you the sector that it's in, which is consumer discretionary. And then on the right side of the screen here, you're going to see a chart, and it's going to provide a 5-year breakdown of how the stock price has changed over time. So we can see back in December of 2019, Tesla was actually $27.89. That's that's crazy to think about. But yes, it was that low back then. And that was just 5 years ago. Now we see the high at 381.59. This is considering the stock split, because if you've been trading Tesla for a while, then you probably remember when Tesla was like over $1,000. Because I can remember a time when Tesla was like $1,200. So you see 381.59 is considering the fact that it has already split. So that's why they have it presented the way it is. But yeah, if you were to go ahead and scroll down, you'll see, of course, the company overview. Then it's also going to tell you you can look at it by the numbers for annually or quarterly. And again, I kind of discussed this in the last video, so I won't go over this in too much detail, but I did want to show you guys this just so you have it as reference. It then goes over the financial ratios and then the valuation as well. You can look at the highlights, what's changed. It talks about Q3 earnings. You can also look at the key trends. And then, of course, it also tells you what drives the stock. We know that obviously Tesla is automotive, so that's going to be 86.2% of their profits. And they break it down to each category to show you the net cash balance as well. And then the forecast for the selected division will appear here, but no need to go into detail about that right now. I'm going to just scroll back up. So yeah, this is going to be a free resource within Thinkorswim, so you don't even have to go looking for this information. You can also click on earnings, and it'll show you from Q1 for the past year up until Q4. And then you can see Q1 for this year up until Q4. Obviously, we don't have anything for Q1 of next year because we haven't gotten there just yet. But again, this is a good breakdown for anyone to analyze if you wanted to see like implied volatility and historical volatility over time. You can also look at the ATM straddle. If you wanted to look at the EPS for actual and Wall Street, it can show you that as well. And you can take the trend lines off or you can leave them on. It's up to you. So yeah, just good information to have. Completely necessary if you're analyzing and you're looking at fundamentals and you also want to combine that with technical analysis. This is just a good way to go about doing so. Okay, so this leads into my next question that I was asked, which is how did I build my stock portfolio? Now, the simple answer to this is just doing research and then making sure I understood fundamentals, along with combining that with looking at long-term data and then historical analysis. So on the screen, you see, of course, the stock categories. I talked about the sectors last video, but now I just want to show you guys specifically how I went about building my portfolio. The first thing I did was I looked at blue chip stocks. And these are going to be large and profitable stocks such as like Google, Apple, Visa. Next, I looked at the cyclical stocks, and these are going to be economy dependent. So stocks such as Tesla, Amazon, Amex, these are all going to be dependent upon how the economy is moving and essentially how money is flowing. Now, next, I looked at defensive stocks. So these are going to be very stable and reliable. So companies like Johnson & Johnson, Costco, Pfizer, these are long-standing, profitable companies. They're going to provide that stability and that reliability on both sides, so you don't have to worry about these stocks. So these are always good to have within your portfolio. Next, I wanted to make sure I invested in dividend stocks as well, just to have that recurring drip. First thing I looked at was the financial sector. So TD Bank stood out to me because, of course, they offer a pretty good dividend yield. Old Realty is going to be a good one as well because people love to have those high payouts for dividends. And then, of course, I wanted to look into natural gas and energy. So, Chevron, ExxonMobil, those are going to be good ones to look into as well. Next, I went ahead and added growth stocks into my portfolio. So, companies like Nvidia, at the time it was Facebook, it wasn't Meta, but of course, that's what it is now. Netflix as well is going to be a high growth stock. And of course, these stocks are focused on long term metrics in order to make sure the stocks are continuously growing each and every year. Last on the list, I wanted to definitely add speculative stocks to my portfolio. So, for example, currently like Palantir, Snowflake, and then of course Coinbase, these have high risks, but they also offer high potential. So, it's a good opportunity for anyone to build their portfolio based upon these stock categories because it gives you an opportunity to keep it balanced. And we all know how important diversification is for maintaining a high level for the performance. So again, this is just a quick little overview, kind of giving you guys insight into what I was thinking when I developed my portfolio, or at least one of them for that matter. And it's just good information. So also remember, this is not an exhaustive list of all the stocks that I have invested in. These are just a few that I wanted to mention in this video just for time's sake. And again, these are all going to be really valuable investments in my opinion. Of course, I recommend doing your own personal research. That way you're investing in things that make the most sense for you and what you feel comfortable with. All right, y'all. So the next question I got was, how do you stay consistent with being profitable? This is a question I get asked most often. And the simple answer to this is reading the charts. Like, if you want me to put it in just plain, simple terms, is reading the charts, understanding what candlesticks do and how they function, and then how patterns consistently repeat themselves over time. It's just basically understanding the fundamentals and then combining that with technical analysis. That's literally the recipe for success. Like, there's nothing better you can do other than learning how to read the charts. Once you learn like flag patterns, you understand how certain channels can show you any type of confluence, divergence. Momentum based trading is going to be good as well if you're like one of the people who likes to trade reversals, and I'll talk about that in a second. But just understanding your trading style, and again, it'll get developed over time, so don't feel like you have to rush and have a specific strategy figured out. If you're brand new, just take your time with it. The next question I had was, what was the first stock you ever bought and why? So the first stock I ever traded was actually Tesla. And the reason being was because at the time I was looking at Tesla, didn't really have a clear view of what exactly I was reading on the charts because I was so brand new to trading. But I understood that Tesla was one of those growth sector stocks at the time. So I made Tesla my first investment. Reason being was because I just thought it would be a solid foundation to start with. Next question is, how did you feel when you made your first profitable trade? I think everybody feels good about your first profitable trade because it basically confirms what you know. And sometimes it could be beginner's luck, don't get me wrong. You don't always know exactly what you're doing when you first start. But if you become profitable that first time and then you kind of continue on that streak of continuing to be successful, it kind of shows you that you're learning. So I guess the answer to that is good. I felt great about it. So I just continued to pick up on the knowledge and I just kept going with it. Next question is, what's the biggest lesson you've learned from trading over the past 5 to 6 years? The biggest lesson that I've learned is patience. I would say that's that's one of the hardest things for people to grasp. And it sounds so simple and we all say it all the time, be patient, but it's so important because if you don't, you end up running the risk of losing money, and nobody wants to do that. So patience is definitely key, especially when you're trading high volatility stocks such as like Tesla. You don't want to ever rush to jump in or out of a trade based upon just like fear or FOMO or anything like that. So that's why the most important lesson for me is just simply being patient. And again, it will take time to develop that because we all had those moments of just being excited and wanting to hop into a trade, but it's like, that's probably not the best thing to do at this time because you really don't know what you're doing. So it just takes time if you're new to it. All right, the next question is, do you have a favorite trading strategy? If so, why? And how does it work for you? So this is a really good question. Some of y'all may have seen this in a past video where I talked about the trading styles that people develop. So for me, it's all about price action. Whether it's a breakout trade, momentum, or reversal, I'm looking for price action because I can analyze these trading styles from any perspective, and not like bragging on myself or anything, but I'm just saying because I've been studying the charts for so long, I literally have adopted any of these styles based upon the setup. So it's all about just understanding what specifically makes sense for what I see. If we're looking at breakout trades, of course, it's going to be defined by support and resistance levels. You're looking for any of that anticipated motion, and it's going to be entering the trade when the price moves beyond a defined point. Now, if you're looking at momentum trading, some people only trade momentum, and they're entering for the direction of the prevailing trends. So what this means is that they're just riding the wave directionally. So regardless if it's looking to make a play for calls or puts, you're literally just going with whatever the trend is. Now, in regards to reversal traders, this is going to be where you wait for confirmation. Reason being is that you're looking for the price to change directionally from a high or a low point, and this is going to signal that market shift in the sentiment. So you're just waiting it out, looking for either patterns or the specific opportunity to hop into a trade based on confirmation. This is one of those things that takes time to develop if you're brand new to trading, so just be patient with yourself when it comes to this. Learn different ways, obviously take some time and kind of trade different styles, and you'll always know what feels right to you and what works the best. It's all about logic, so make sure you keep that at the forefront. And then again, whatever you feel most comfortable with. That's what I always say. If you are one to only trade breakouts, then stick to that. So whatever is going to lead you to be profitable and stay profitable, I wouldn't say change it. And just kind of continue to develop that over time. All right, so the next question is, what's the most challenging part of being a trader? So for me, this is kind of a two-part answer. I'll say the first part being that learning curve in the beginning. So I think we've all been there where it's like you just start off and you kind of think you know enough and you enter into trades and you're like, okay, I'm successful with a few. And then after time, it's like, okay, wait a minute, this isn't working. And trades start to go against you and you start to lose money. That's the challenging part, is continuing to go back to trade again. So basically what I'm saying is getting over that initial hurdle of that learning curve for me was the most challenging. But I do remember having a moment where I realized that trading isn't about 1 to 2 trades or 3 to 4 trades or whatever. It's not about the numbers. It's specifically about how you are trading that price action, understanding fundamentally what's happening, and then, of course, just looking for patterns. And then when you add other educational tools and, of course, confirmation, it really just makes your trading that much more simple. So that for me is one of the most challenging aspects to it. And I'll say the second most challenging aspect is something that people may agree with as well, and that's going to be developing that strategy over time. So when you first learn to trade, you may not even have a plan at all. You may not have a strategy set, and I think that's a challenging aspect as well because you don't know how to develop one. Sometimes it can be tough. So that comes with time. It comes with also understanding specific ways you trade. It comes with understanding trading psychology as well. And then just combining that with actual logical reasoning. I think that is, again, something that just takes time. The next question is, if you could give one piece of advice to someone just starting out, what would it be? Y'all probably y'all probably gonna get so tired of me saying this, but my piece of advice that I would give to any new trader is literally y'all already gonna say it with me. Read the charts. Like, I'm telling you, like, that's the hardest aspect of this. If you can look at this chart, for example, let me actually give y'all a real world example. I'm gonna go to AMD real quick and I'm gonna show y'all exactly what I mean. I'm gonna go here. Let me pull it up because I was looking at this. Was it yesterday or today? I can't remember. The 1 year. Was it the daily? What was I looking at it on? Hold on, y'all. Give me 1 second. Was it the 5? It wasn't a 5 year. Okay, y'all, so I got it. I was looking at it on the weekly. Okay, so this is what I wanted to show y'all. All right, so again, I have AMD pulled up. So this is the best example I can give for like new traders as my advice. When you learn to read the charts and you understand how candlesticks function and how they work, you're better able to be prepared for trades. So I'm going to show y'all the best example that I can give because I remember looking at this, I think it was yesterday, so it just came to my mind. So y'all just stay with me as I'm going through this. Okay. So we're going to look at the high. So we know that within the past 52 weeks, which is the past year, the high was 227.30, right? Okay, so we're looking at this particular candle right here. Now we see the candle before then, which is the week prior. This candle was in February of this year, and then this was March the week after. So we see this is an extremely bullish candle. We know that for sure. And then this candle also is bullish as well. Now it's green, so it is bullish, right? But in my mind, how I learned to read the charts, this for me isn't bullish. Like, I don't look at this high at 227.30 and think this is a bullish candle just because it's green. Let me tell you why. When we look at the body on this candle the week prior, we see how long it is. Okay, you see how long the body is. But if you look on this candle here on the week of March 4th, look how long the upper wick is. Now, remember, I told you guys, reading the candles is about understanding why these wicks are either long or short. So, when we see the candle wick is literally, for this example, like 4 or 5 times higher than the actual body of the candle itself, it lets me know that the sellers push this price all the way down. So, for this whole week of trading, the selling momentum was way stronger in many aspects. But at the end of the day, the buying power was still just a little bit higher, a little bit stronger, enough to make sure that the price actually closed a little bit higher than what it opened. But that's not enough for me to feel confident in this being a fully bullish candle, even though it is green. In my mind, this is telling me that sellers are about to step in. And how do I know this is true? Because it's confirmed with the next candles that follow. You guys can see that here. So this one obviously is bullish, but again, the trend kind of continued on that downward slope. So that lets me know that my evaluation of this and how I view it is that this selling power is way too strong for this to continue to be an uptrend. This high reaching 227 is not something these sellers wanted at the time, which is why these bearish candles followed. So again, this being such a strong push down lets me know the valuation of the stock is going to fall. So again, learning these kind of little intricate things and details about the charts, it makes a world of a difference. So I hope this example makes sense because this is the first thing I thought of when I was like, y'all, let me give y'all a real world example. So yeah, just looking at historical price action, understanding how volume either backs a trade or it doesn't confirm it. And in this case, again, this is a green candle. It is in fact bullish, but not in my opinion. Like I look at this and see bearish signals all over the place because it's just the body is too short. It's too small. Yeah, that's my best example that I can give y'all that just came off the top of my head. So I hope that makes sense. All right, so the next question is how do you handle the mental side of trading, like losses or market uncertainty? This is a really good question as well. And to be honest, you just have to get used to the ebbs and flow of the market. That's again the simple way of stating it. Is the market is going to have highs and lows. When you understand just the dynamics of how the price and the action of the market moves, you don't necessarily have any bias towards any direction. So when the market is uncertain, you pretty much understand that that's an opportunity to either buy in or to sell off depending on what position you're in. It's all about the analytical way of thinking about it. So for example, some people may see the market crashing and think to themselves, okay, I have to panic sell. To be honest, that's the time when you really should be buying in because the prices of the stocks and ETFs are much lower because of the sell-offs. So I just look at things just from a different perspective. And just when you know that the market does show those signs of uncertainty, that's really the best time to make sure that your portfolio is aligned so that you don't have to worry about taking major L's. Like if you know, for example, you're comfortable losing maybe $100, $200 on a trade if you're just starting out, that's completely something you got to be okay with before you even enter the trade because then you don't worry about taking an L on that amount of money. It's not really an L at that point because you already mentally prepared for it. So for me, that's what the biggest adjustment you have to make is understanding that it's going to happen. You're not going to win every trade. So when you do take the L's, just let it be. Like go to the next trade and move on. Now, don't revenge trade. That's not a good idea to do. You don't want to just say, okay, I lost $100. Let me go force myself into another trade. Nah, take a break, learn from the loss, and then see what you can do to make sure it doesn't happen again so that you don't lose that same trade in the same setup. So it's really just a learning game. Okay, so the next question is what's a typical trading day like for you? So for me, a typical trading day is going to be one, analyzing the pre-market. So what I always like to do is if it's before bed or maybe it's early morning before the market opens, I'm taking a look at what happened prior to the market opening. Now, some people consider this as important and some people don't. I consider it as important because, of course, I'm day trading. Now, it may not be a factor for some people who are swing trading. I've seen some people say they completely ignore pre market. And again, that's a choice that you can make. But I'm always analyzing what's going on before the stock market opens to understand how it will open. So if you see any type of patterns, if you see a flag, a bear signal, bullish divergence, if you see anything that's going to indicate a reversal, whatever it may be, that's going to be how I evaluate to see what's going to happen and then essentially what's going to happen as it consolidates or if the stock market makes a break of a retest or if I see support and resistance levels that maintain or they may also bounce or break from those levels. So it just depends on what I'm seeing. From there, I just go about looking for quality setups. It may take time. I may not see any within the first 30 minutes or I may see the perfect setup, but it usually doesn't take me long to kind of figure out. So for example, when I seen this flag on Apple, this was a good clue to understand what was going to happen, essentially in terms of staying within this range and then looking for that 231.89 and then understanding how this level would be played through, looking at that break. And then of course we saw the stock with all these green candles rising up. Great setup, perfect entry, perfect exit for me. So just understanding simple things, looking for patterns, and just going about evaluating the charts effectively. So yeah, that's pretty much how a typical trading day is like for me, just looking for quality setups. Next question was, what inspired me to create a YouTube channel about trading and providing this content? The simple answer to this is just wanting to provide information to people. So people are going to just naturally gravitate to what relates to them. And for me personally, just making these videos is pretty fulfilling because I know it helps people. And then y'all always show me love and y'all send me messages. Y'all tell me how y'all made such and such amount of profit from watching this video, or how you felt so inspired to learn more about trading and investing from seeing one of my videos. And it really just keeps me motivated to keep going and to keep filming because I do see that y'all are getting value out of the content. So for that, I'm really grateful and thankful for y'all. I really do appreciate all the love and support y'all have given me so far. Y'all literally be speaking so much love and light to me. So again, thank y'all a million times over. Next question is, how do you stay motivated to keep learning and improving your skills? I really like this question. I think, to be honest, I just kind of gave that answer. I will say y'all motivation, just keeping the mission in mind and understanding the value that I'm trying to provide to people, and understanding that when I first started trading 5 to 6 years ago, there wasn't many people, I will say, kind of discussing the information, or at least I didn't see it. And I would have loved to have somebody like me kind of explain these things. I'm not saying I'm the perfect, person to explain all these concepts, but it is helpful when somebody speaks your language in a sense. So, yeah, I just stay motivated by understanding what I'm providing as value, and I hope that y'all continue to see it as that. Yeah, that's my day to day motivation for it. Okay, so this next question wasn't exactly phrased the way I'm about to say it, but I'm pretty sure that's what they were intending to say. And the question is, what's one common misconception about trading that you'd like to clear up? I think one common misconception that people have about trading, that once they see a few profitable trades actually transpire, that it'll just continue to happen. And honestly, it's one of those things where you just have to develop those skills over time. Some people actually have beginner's luck, and that's the reason why they're profitable within the first couple of trades. But in your mind, you may think, okay, I'm profitable, I know exactly what I'm doing. So the misconception is just that. You may think to yourself, okay, I got it down, let me just continue with what's working. And you may actually find that that's not it. Like, that may not be true. So the whole point is just to understand that it's not as easy as it looks, but it's not as hard as it is perceived either. With that being said, the misconception is that it's either super easy or that it's super hard. I think neither one of those is true. Again, it's one of those things you shouldn't rush into, but don't decide to just quit on it either. Like, give it some time. Okay, so the next question is, what do you enjoy doing outside of trading? For the most part, it's just being around family, going to concerts, watching sports, going to different games, just enjoying life outside of, looking at charts. Yeah, that's pretty much what I like to do. I love reading as well. I know that's boring to say, but that's what I like to do. I like reading and I like writing, but y'all already know that. So, yeah. Couple more questions. So, if you could give your beginner self one piece of advice, what would it be? I would say the advice that I would give myself when I first started is to not anticipate anything happening based upon what I felt. Like, I was more so trading off instinct and feeling rather than trading off logic and reasoning. So that's the one piece of advice I would have given myself. It would have saved me a lot of time, also saved me a lot of money as well. So yeah, that's the main thing I would have told my beginner self as a trader. Okay, and the last question for this video, this person was trying to be funny. The question is, why am I a Raiders fan? See, now, I've been a Raiders fan since I was 9. Honestly, I'm just an optimist at heart. Like, you can't tell me nothing about the Raiders. But for real, that's my team. So, yeah, just holding on to hope is really what it is. But wait, hold on now. Now that I think about it, the Raiders do have some accomplishments. But for those of you who have no interest in me talking about this, the video is pretty much over, so I don't want to hold y'all. But for those still listening, I do remember back in 2016, and yes, that was almost a decade ago, the Raiders went 12-4, and we did set a record for the most penalties in a game, but we still managed to win. And I remember we played the Bucks. Yeah, I think it was Tampa Bay. And we had over like 20 penalties, which still unfortunately remains as an NFL record. But despite that, Carr threw for over like 500 yards and 4 touchdowns. So, I mean, there was hope back then. And honestly, the only reason I remember this so well, that was our last season that I was able to brag about. Dang, that's crazy. We haven't done much since then. But that's neither here nor there. Okay, I'm rambling now. But yeah, y'all, I hope y'all enjoyed this video and just learning a little bit more about me. I hope y'all are also enjoying time with y'all families. Feel free to leave any questions or comments down below. As always, I thank y'all so much for watching. And of course, I'll see y'all in my next one.